Imagine learning how to trade in the stock market without risking a single dollar of your own money. No fear, no stress, no losses, just pure practice in a real market environment. That's exactly what paper trading is. Paper trading is a method where you simulate real trades using virtual money instead of real cash. It allows beginners to experience how the market works, understand price movements, test strategies, and build confidence before investing real money. In simple words, paper trading is like a flight simulator for traders. You learn how to fly without crashing a real plane. Most new traders lose money not because the market is bad, but because they jump in without proper practice. They follow random tips from social media, copy YouTubers, or trade based on emotions like greed and fear. Paper trading removes all these problems because it gives you a safe environment to make mistakes. You can buy and sell stocks, options, or crypto in real-time market conditions, track your profits and losses, and analyze your decisions, all without any financial risk. This is why almost every professional trader recommends starting with paper trading. The biggest advantage of paper trading is that it helps you build a trader's mindset. You start understanding important concepts like entry points, exit points, stop loss, risk management, and position sizing. Instead of guessing, you learn through experience. You see how news affects prices, how trends form, and how volatility works. Over time, you begin to think like a trader, not like a gambler. And this mindset is the real secret behind long-term success in trading. Paper trading is also extremely powerful for testing strategies. For example, if you have a strategy like buying breakout stocks or using moving averages, you can test it in paper trading for weeks or months. You can see whether it actually works or not before putting real money at risk. Many traders skip this step and directly invest real money, which is why they blow their accounts. Smart traders always test first, then invest. Another important benefit is emotional control. When real money is involved, emotions take over. Fear makes you exit too early, and greed makes you hold too long. In paper trading, since there is no real loss, you can focus purely on learning and improving your decision-making process. You can practice discipline, patience, and consistency, which are the three most important skills for any successful trader. So, if you're serious about trading and want to avoid unnecessary losses, paper trading should be your first step. It's free, it's safe, and it gives you real market experience. Think of it as your training ground, the place where you fail, learn, improve, and prepare yourself before entering the real battlefield of financial markets. Paper trading works by using a virtual trading account that mirrors the real financial market. The prices you see are live or near real time, exactly the same as what real traders are seeing. The only difference is that the money is not real. You are given a fixed amount of virtual capital, for example, $10,000 or $100,000, and you use this money to place trades just like you would in a real trading account. You choose the stock, decide how many shares to buy or sell, set your entry and exit, and then track the performance of your trade. When you place a trade in paper trading, the platform records everything: your buying price, selling price, profit or loss, and even the time you entered and exited the trade. Over time, you get a full trading history that you can analyze. This is extremely important because trading is not about one lucky trade. It's about consistency over many trades. By reviewing your paper trading history, you can clearly see your strengths and weaknesses. You can identify which strategies work best for you and which ones keep failing. Most paper trading platforms also provide advanced tools like charts, indicators, technical analysis, and news. This allows you to practice using the same professional tools that real traders use. You learn how to read candlestick patterns, how to use indicators like moving averages, RSI, and MACD, and how to combine multiple signals before making a decision. This builds real technical skills that directly transfer into live trading. Another key part of how paper trading works is learning order types. Many beginners don't even know the difference between market orders, limit orders, and stop orders. Paper trading lets you experiment with all of them without fear. You can see how a market order fills instantly, how a limit order waits for your price, and how a stop loss protects you from big losses. These small details make a huge difference in real trading. Paper trading also teaches you risk management in a practical way. You can practice rules like never risking more than 1 to 2% of your account on a single trade. You can test how different position sizes affect your account growth. You start realizing that protecting capital is more important than chasing profits. This mindset is what separates professional traders from beginners. In simple terms, paper trading is not just fake trading. It is a complete learning system. It simulates the full trading experience, from strategy creation to execution, analysis, and improvement. If you treat paper trading seriously, like real trading, it can save you months or even years of expensive mistakes in the real market. Once you have spent enough time paper trading, the next step is moving to real trading. But this transition must be done carefully, because real money brings real emotions, fear, greed, and anxiety that were absent in paper trading. The key is to start small. Even if your paper trading account shows consistent profits, never risk a large amount of real money at the beginning. Treat your first trades like an extension of your practice. Use a small portion of your capital, follow the same strategies, and stick to the risk management rules you developed during paper trading. Another important step is to adjust expectations. In paper trading, it's easy to feel invincible because losses don't hurt. In real trading, even small losses can impact your confidence. Expect some losses and understand that they are part of the process. The goal is consistency, not perfection. Focus on executing your strategy correctly, controlling emotions, and sticking to your trading plan. The profits will follow naturally over time. It's also crucial to maintain the same discipline you practiced during paper trading. Many traders fail at this stage because they start improvising, taking impulsive trades, or ignoring stop-loss rules. Your habits during paper trading should directly translate into real trading. If you treated paper trades seriously, you already have the structure needed to succeed. Keep a journal for real trades, just like you did with paper trading. Analyze your mistakes, track performance, and continuously improve your strategies. Gradually increasing your position size is the next step. Start with small trades and slowly increase the amount you invest as you gain confidence and experience. Never rush this process. The goal is long-term growth, not quick wins. By increasing your position size gradually, you allow yourself to adapt to the emotional impact of real trading while minimizing the risk of large losses. Finally, remember that paper trading is not a waste of time. It's an investment in your skills. Many successful traders spent months or even years paper trading before risking real money. They developed strategies, learned risk management, and trained their mindset. By the time they entered the real market, they were confident, disciplined, and prepared for both profits and losses. If you follow this path, you will significantly increase your chances of long-term success in trading and avoid the common mistakes that trap beginners. Paper trading is your foundation, your training ground, and your safety net. Treat it seriously. Learn everything you can, and when the time comes to trade with real money, you'll be ready to do it confidently and strategically. And that's exactly how profitable, consistent traders are made. There are many platforms available today that offer paper trading, and most of them are completely free. These platforms are designed to give you a real trading experience with virtual money, real market data, and professional tools. Choosing the right platform is important because the better the platform, the better your learning experience will be. One of the most popular paper trading platforms is TradingView. TradingView allows you to trade stocks, Forex, crypto, and even commodities using a simulated account. It provides powerful charts, hundreds of indicators, and a very user-friendly interface. The best part is that most traders already use TradingView for analysis, so learning paper trading on it prepares you for real-world trading. You can create strategies, test them, and track your performance easily. Another excellent platform is Investopedia Simulator. This platform is especially good for beginners because it focuses more on learning than complex features. It gives you a virtual portfolio, real-time market prices, and detailed explanations of how everything works. It's like a trading school built inside a simulator. If someone has zero experience, Investopedia Simulator is a great starting point. Thinkorswim by TD Ameritrade is also considered one of the most professional paper trading platforms. It offers a feature called Paper Money, which gives you access to the same tools used by professional traders. You can practice stock trading, options trading, and even advanced strategies. The platform might feel complex at first, but if you master it, you'll be operating at a professional level. For crypto traders, platforms like Binance and Bybit offer demo trading modes. These are perfect for practicing crypto trading without risking real funds. Since the crypto market is highly volatile, paper trading becomes even more important here. You can test how different strategies perform in fast-moving markets without losing money. The most important thing is not which platform you choose, but how seriously you use it. Many people treat paper trading like a game and take random trades. That defeats the whole purpose. You should use paper trading exactly like real trading. Follow rules, manage risk, and track every trade. The goal is to build discipline and consistency, not just make fake profits. A good platform gives you data, tools, and structure, but real growth comes from your mindset. If you respect paper trading as real training, it can become the foundation of your entire trading career. Even though paper trading is risk-free, many beginners still make mistakes that prevent them from truly learning and improving. The first common mistake is treating it like a game. Since the money is fake, some traders take random trades, ignore strategies, or chase unrealistic profits. This is a huge trap because the habits you form in paper trading will carry over to real trading. If you develop careless habits now, you'll make the same mistakes with real money later. Always treat paper trading as if it were real money on the line. Follow your rules, plan your trades, and stick to your strategies. Another mistake is not tracking or reviewing trades. Some traders place trades, watch them for a while, and then forget about them. Without analyzing your trades, you will never know what works and what doesn't. Keep a trading journal. Record entry points, exit points, the reason for the trade, results, and your emotions during the trade. Over time, this journal becomes a goldmine for learning. It helps you identify patterns in your own behavior, shows which strategies are effective, and highlights mistakes before they cost real money. Overtrading is another common problem. Some beginners get so excited about paper trading that they place too many trades in a short time. Overtrading can create confusion, make it hard to track results, and build unrealistic expectations. Remember, trading is about quality, not quantity. Focus on a few trades per day or week, apply your strategy carefully, and analyze the results thoroughly. This disciplined approach will benefit you in real trading. Another mistake is ignoring risk management. Even in paper trading, many traders take huge positions or ignore stop-loss rules because it's not real money. This is dangerous because it prevents you from learning the most important lesson in trading, protecting your capital. Practice proper risk management with every paper trade. Decide in advance how much of your virtual account you are willing to risk per trade and stick to it. This habit will make your transition to real trading smooth and safe. Finally, some traders stop paper trading too early. They feel confident after a few successful trades and jump straight into real trading. This is risky because short-term success in paper trading doesn't guarantee long-term profitability. Markets are unpredictable, and strategies need to be tested over weeks or months to confirm consistency. Commit to a period of disciplined paper trading. Test your strategies, track results, and build confidence before ever risking real money. Paper trading is not just a practice, it's the foundation of becoming a skilled trader. Avoid these mistakes, treat it seriously, and use it as a stepping stone. By the time you switch to real money, you'll already have experience, confidence, and a system that works. This is how professional traders start, and this is how you should start too.